Good morning, traders. Welcome to Elite Currency. My name is Chris, and of course today an update on the euro dollar and pound dollar. But before we do that, wanted to make you aware of the FXDD YouTube channel. Nennet and I also add analysis and webinars there, so please subscribe to get the updates on that as well. All right, now time for the euro dollar daily chart. We had a double bottom pattern and a reversal pattern, in fact, and some good momentum here. So I think that this could be a continuation of the sideways box that we've seen so far, and that this could be maybe an ABC pattern. So looking for that last push up to about here perhaps, which could be another resistance zone. If price breaks above this 112.50 zone, then there could be an extension to 113, 113.25, not a huge space to test the retest the 144 EMA like I did here and here and here. And that would be the key decision zone. If it breaks above that, then we would finally be in a larger uptrend. But for the moment, I'm expecting a bounce at 112.50 or a bounce at 113.25 for a further downside. Of course, the confirmation would be a break below 111, a break with a candle close on the daily chart or a weekly candle close below 111. That would confirm finally that downtrend continuation. In that case, we had downside correction, and we're finally seeing the continuation to the downside. So, but for the moment, the most likely path is for price to retest 112.50 now and then bounce at that spot. That's what I'm expecting for the moment. So let's dive into that 4-hour chart. All right, and you can see the double pattern here if we zoom out a little bit. So what I'm thinking is that this is maybe a wave A. There was plenty of momentum here, that this could be a wave B, and then up we go for wave C to that 112.50 area, which could be the bouncing spot for more downside. So if we put a fib from here to here, like this, well, basically we could have a bounce at the 61.8 fib, maybe make an inverted head and shoulders pattern like this. So that could be a level to think about. But really any of these fibs could be a bouncing spot. It depends a little bit on price action and candlestick patterns that we see at these fibs. That's where I'm expecting the bounce to take place and head towards the minus 272 target, which is another area where I expect a bounce to take place and move back down again. Let's see. I'm waiting for price candlestick patterns to confirm my analysis. If price does make a bull flag, however, at the minus 272 target like this, and then break to the upside, well, of course, in that case, we're expecting more upside, obviously. This bull flag pattern is that, and then, of course, very important information about the psychology of the market. However, if it flies down like this and then makes a bear flag, of course, then while it's looking more bearish. So 112.50 is important zone, but it also depends a little bit on how price responds to that zone. Same thing for the bounce at these fibs, right? If price were to move down a lot and then make a bear flag, well, that would change my perspective on matters. So as long as price stays corrective and choppy, I would be expecting that upside. So yes, tricky environment, but that's just because the euro dollar is in a big range and is very choppy at this moment. All right, then we have the pound. We were already bearish on the pound in the last video, of course, in the video before that, or many videos actually, but anyhow, in the sense that we're thinking that this is a wave 3 and that we're going up for a wave 4. So has that 4 completed? Well, we had a decent retracement, right? We went to the 23.6 fib. So that could be it. It might still move up to the 38, which I think could still be a very strong bouncing spot. If it gets there, that's 127.75. But will it get there? That's the big question. For the moment, price is back below the 21 EMA. And so from that perspective, maybe not as likely. But I think for the confirmation of a continuation lower, price would need to break below this fractal, I think. All right, 126.67. If it breaks below that with a good candle close, with a 4-hour candle like this, then in that case, I really think that this is ready for the wave 4 is finished here, and this is going down for wave 5. Down to the targets are 125 and then 124.25 in my view. So then an immediate follow through is likely. If you look at the 1-hour chart, it could be I have this fib on from here to here, maybe because this is one ABC. This could be another ABC. So 78.6 fib is important, and if price were to break below that level, then I really don't think that a bigger bullish correction is going to take place. But if price does bounce, and if it does break above this 21 EMA high on the 1-hour chart, well, that could be a first signal that yes, price will still make a bigger wave C to finish that wave 4, and the target therefore and bouncing spot at the same time would be that 38.2 fib at around 127.75. This wave 4 is valid as least as long as price stays below the 50 fib. All right, so even if price makes a very choppy and corrective pattern here, all of that could easily be part of a wave 4, by the way. Actually, it's very typical for wave 4. So the break here is possible, but we got to keep in mind that that would be a very short wave 4. So for the moment, I wouldn't be surprised if we get a bounce and if we get a bigger kind of wave 4 pattern. The confirmation of that would be the break above the 21 EMA high, in my view. Whereas a 4-hour candle close below 126.67 would make a bearish continuation more likely. That's my view at the moment. In any case, all of this, I think, is wave 4, unless really price breaks above the long-term moving average here on the 4-hour chart. All right, that's about it for today. Thanks for joining, and of course you can find out more free material at elitecurrency.com, our free analysis, our free indicators, our free guides, our free starting package, all of that is there. So check it out if you'll have a few minutes time, and wish you all good trading, of course, and see you soon. Cheers.